as we can see, we are looking at Euro AUD. I trade currency pairs. So I look at the current market structure, which is this structure right here, right? What I can see here is I can see that there has been a liquidity sweep here, right? Liquidity sweep down here. The reason that I see this as a liquidity sweep is because this this lower high was broken, right? It was broken. So this for me, I'm going to consider it as a break of structure because it has been broken. Let's say the market broke this low here and then this candlestick closed below, then this wouldn't be a liquidity sweep. It would have been a break of structure, right? Yeah, so this is a break of structure. And then what I use is I use the fib retracement tool. The reason I use the fib retracement tool is because um I have switched from using an order block for my entries. The reason I switched from using an order block is solely because sometimes the market fails to tap me in. Sometimes the market reacts before tapping the order blocks. Yeah, well, so it's reasons like that. And also market conditions always changes. So you need to adapt with the market changes, with the market conditions, right? So this is what I see. I use the 71 point fib retracement, which is this one right here. So this is my entry point. I enter on the 71% fib level, and to confirm that my entry is valid enough, there has to be a fair value gap around this area, right? There has to be a fair value gap around this area. If there's no fair value gap around this area, I will not enter the trade. You see, I will not enter the trade. And yeah, this is it. I consider this an A plus setup. This is because there is a valid liquidity sweep, and as we all know from ICT and SMC that when there is a liquidity sweep, then the market is willing to change direction. Yeah, so it's like that. What I do is I take out my position tool, longs here, and then it's like this. Oh, and the reason that I am analyzing on the daily now, I know at first I said that I analyze on the 4 hour and enter on the daily. You're on the 4 hour too. The reason now I'm analyzing on the daily is because I want my bias for the 4 hour to align with my bias on the daily. You see, you get what I mean? I want that. So this is what I can see on the 4 hour, which is it aligns perfectly with the daily time frame. Now I consider this as an A plus setup, but with it being an A plus setup, I don't expect it to like hit TP or hit S. The market can do whatever the market wants to do. My job is to use proper risk management and just put in my pending order, which is a buy limit in this case. So yeah, and also here you can see that there's also a fair value gap here which hasn't been tested. Yeah. So yeah, this is it for this pair. This is it for this pair from my side. There's a break of valid break of structure. There's a liquidity sweep. There's two fair value gaps. So the market can come down, react to this fair value gap, and then try to go up, and then maybe drop to fill this daily fair value gap. this daily fair value gap, as the market likes to fill the higher time frames fair value gaps. It's what I've noticed. You see, so this is it from this pair. Let's go over to another pair. Um, right here, I'm not gonna delete the things that are on here. I'm just gonna explain. You see, as I've explained the strategy on the first pair. Now here, just gonna briefly explain this pair, this trade that I took here. I took on, when was it? I took on Wednesday, which was on the first, no, yeah, on Wednesday, which was on the 1st of October of this year. Um, the market, the market here is on a bearish trend, or should I say bearish momentum. I saw that the market here dropped. Wait, let me use I want a thing to be able to draw with. Okay, it's fine. As you can see, the market here, the market dropped, but having seen that the market dropped here, there was no valid break of structure. You see, there was no valid break of structure. And then here, the market did a correction, and then it dropped, breaking this structure. It broke the structure, further going down. And I know that here, it also broke structure here, right? It broke structure here. But here, this the market created this as an inducement, which is liquidity, right? This is liquidity. So the market filled this liquidity and then further dropped, right? It dropped. And here I made 2.9 risk to reward, right? And this trade helped me to pause my phase one on my prop account, right? So what I'm currently looking at on GBP USD is a continuation towards the downside. The reason is because we haven't yet broke above, signifying that the market wants to continue to the downside. We're still on the downtrend, right? If the market fails to break this structure here, then I still want to sell this market to here to further break structure towards the downside, right? This is it from GBP USD. I'm just gonna go quick. This is USD JPY. USD JPY, this is what I'm looking for. But here, I'm quite skeptical because of this gap here. This gap here. The market might come down, tap me in, but want to come further down to come filling this gap right here, right? This gap right here, right here. But still, if it does come and fill this gap right here, I would have been in the trade still. You see. So this is a valid setup too. Then I'm looking at Euro USD. Euro USD, Euro USD and GBP USD, they kind of have the same setups, right? Here, I saw this liquidity sweep up here. This liquidity sweep was caused by, I think, FOMC. Yeah, FOMC few weeks back. FOMC, it swept this liquidity, and then the market further pushed down. There was no valid break of structure here. So this was the first break of structure that attracted my attention. So I marked it out, and then I took my fib level. I marked out the 71% level. My entry was here. And then and we hit take profit, which was 2.46 RR. And then, but I trade because I was on the GBP USD trade. And this one, I took this one. I took this trade. Ugh. The connection here is bad. It's bad, bad, bad. So I took this trade. The reason that I took this trade was here we're still on the downtrend. I saw this break of structure. I took my fib level and I put it here, and then as you can see, we hit take profit, right? I participated in this trade with a 2.9 RR trade. Yeah, valid fair value gap, a valid 71% level. This was a plus setup. We hit take profit. Now, currently, this is what is happening on Euro USD. We saw that we had a downtrend, right? I mapped out this breaker structure because it's valid on the daily time frame, and also I have to align my setups with the daily time frame, or else my setups won't be that valid. You see. So this was a breaker structure on the daily time frame. I mapped out the fib retracement, but as you can see here on the daily time frame, there's no imbalance. Hence why I have to drop to the 4 hour to be able to look for an imbalance on the 4 hour, which is right here, right? Here, the imbalance here, and also here, imbalance here, and here, there's also a gap that the market filled. It didn't fill it till to the top, but it filled it. It tapped onto the gap, and then the market further dropped to the downside. Okay, guys, that was it from my side. These are the okay. Let me go to the dollar index so that I can see that my direction aligns with the dollar, right? On the dollar index, this is what I currently have. I'm looking for buys on the dollar index. Yeah, as you can see, current market structure. Um, this is a continuation of the buying momentum of the dollar. So this is what I'm looking for the dollar. There's a break of structure continuing up. I took the fib level, I took it here till up there. So now the entry tapped, zero drawdown, minimal drawdown, and then went up. We're gonna see what's gonna happen on the upcoming week, or this week, should I say. The dollar might drop, might consider dropping to come and fill this gap, but we're gonna see. That's it from my side, guys. I'm gonna give ICT a chance to do his market breakdown. Yeah, thank you.
Yeah, okay.
Say ICT.
Yeah.
So should I now stop? I'm recording it.
Yeah.
You
But
stop. I'm stop sharing my screen
yeah, yeah, well, I feel like definitely getting a stalling because of the 14 minutes.
all the time.
Yeah.
Oh, because of the time, right? Okay. I'm gonna stop sharing, and then we just gonna combine the two videos, Ebo.
Yeah.
Uh, stop. Did you record, right?
Yeah.
Oh, I'm watching. I'm gonna stop sharing.
Yeah, I'm recording, bro. Yeah.
So yabona ngeli xesha lishiyekileyo ngoku, let's just do a
Yeah.
fundamental
Analysis, ne? Okay.
analysis somewhat since start another Zoom after the analysis.
Yeah, I just want to activate my trading view, yeah, bro.
Okay, cool, bro.
So, yeah. Okay.
So you're gonna share, right?
Yeah. I'm gonna share my screen
Okay.
just a few minutes ago. Uh, XY. Once I am, I'll just do an analysis, yeah, and then if we get stopped out by time, and then we're gonna carry on the next video, yeah.
So we just edit that.
Yeah, I'll just mix them.
Okay, okay, okay. That's cool, bro. How many minutes? Was it about this session ends at half past?
Yeah, between half past, yeah, in those times, 25 to.
Yeah.
So how many time is left now?
I'm gonna have to be.
How much time is left?
I think 14 minutes if
14?
it's gonna end at half past. Yeah.
Nah, that's a lot of time, bro. Yeah, I can share my screen.
Yeah, you can. But on my side, I think I'm gonna need to practice like being faster in terms of market analysis.
I'm just gonna hear from you if it shows on your side, though.
Yeah, it's now visible on my side.
Yeah, so
Ah,
yeah, guys,
ICT.
as Mr. Tabiso here, Lucas have already said my name. Uh, I'm Junior, but in this space, I'm just ICT because I use a lot of ICT concepts, SMC. You know, to me, it's actually the same thing. So yeah, let me just. So yeah, I'm gonna start from the DXY. So what made me believe that the DXY is going upside for the whole of October or the whole 3 weeks? I don't know. Yeah, well, I'm also a swing trader, by the way. I analyze on daily, 4 hour, weekly, sometimes monthly. So, but this was a monthly setup. It was a monthly candle range theory, in fact. Hence, you see the entry is on a daily time frame. But I did not enter on a real account or some sort of prop firm because I don't trade DXY. I just look it to correlate with other base pairs or other counter basis pairs of DXY like AUD USD and Euro USD and you know GU. So what happened here is I'm just gonna switch up broker because I don't wanna remove all the setups. So what happened here is as much as I use ICT to enter some setups or do whatever with ICT and SMC concept, I mainly most of the time I use what we call a candle range theory, which is CRT. And most of the time, I wait for two candles. Okay, I wait for two candlesticks for my confirmation. You see, the first this there was a bearish candle, and the second month in September there was a bullish candle indicating a reversal to the upside to break the upper structure of the candle from the last month. Um, so the strategy works this way. You just wait for these two candles, this one to be swept and prices, and you wait for a confirmation that the price is willing to reverse. And as we all know, when you begin to trade that a doji candlestick, which is right here, it indicates a reversal. That's just a basic trading strategy. So what is also guaranteed in this strategy is that it will always reach 50%. You don't have to aim higher. You know, me. I just wanna complete. I just wanna aim high, but you don't have to aim higher. So and then I dropped into smaller time frames for entries. As you can see in 1 week time frame, we can't find the entry. It's a bit complicated, but there's a low that was swept here, and there were orders taken. Unfortunately, we don't yet use a volume footprint strat a volume footprint screen, but we do have an idea of what is happening here at this part. So I went on the daily time frame. Here I see is what we call a liquidity sweep, or low or high has been taken out, and we all know people who use the smart money concept and ICT that once a low has been taken out and price shows a turtle soup, of which that's what happened here, it is most likely to reverse to the other side of the high liquidity or the orders that are there waiting to be filled. So here we can get our points of interest like the inverse fair value gap. You know, if you don't know what an inverse fair value gap is a failed. This was a very fair value gap, but it failed, and then it went up to form another fair value gap. So it's an inverse, and we also have a BPR here because in that inverse we have another FEG of which indicates that price will be pushing higher. Now, I'm not saying this is a 100% strategy or anything. I'm just saying this is how I analyze. I don't complicate. You see, my target will be that CR high of the month, and yeah, the stop loss depends on your account or how much are you willing to risk. But I advise every time a person uses a CRT that their stop loss, they put it at the swing low, the most recent swing low, of which it is here. And price just tapped in the IFEG and it went up, of which is currently is going up. So now from this, I know I can go to the other pairs like AUD, USD, you know, other pairs like AUD, USD. Same thing that happened here. CR high, CR low. This one was on daily. And then this was Tuesday. And then Wednesday price swept the Tuesday high. And the first thing we're looking at um are the areas of entry, of which here you can consider this as an order block. You can also consider this as an order block. But I also use a Fibonacci retracement tool to you know to scale in my entries so that they become more accurate. Because yeah, this was the recent high, and this was the recent low. At that time, I even entered the trade. So I placed my entry on my 0.78 or 79 Fibonacci retracement tool, which is the optimal trade end, where that's the place where most people are likely to place their buys or their sells, you know. And then price just tapped in there and then boom, it went down, you know. As I've said from the previous DXY analysis that you don't have to wait for it to hit full profits. You just need 50%. The 50% is guaranteed that it will reach 50, and then yeah, it just reverse. But I'm still waiting. I mean, I'm also bearish, as my friend here is bearish on the counter basis of the USD pairs and bullish on the USD base pairs. So yeah, I've had two analysis for the week. I've had AUD USD and the the DXY and the DXY, of which is currently playing out now. You know, yeah, I'm also into crypto, but I'm not gonna display that now because it's not what this session is about, and no analysis on Euro USD or AUD USD. Yeah, I just I just trade fewer pairs. I just trade fewer pairs. I don't. I understand there are many to catch or many pairs to trade in the market, but I just prefer these ones, these small ones. And as time goes by, I think I'll just reduce them. I'll just remove those indices and maybe and this one, I don't trade it. I just look at it to look at the currency of SA, what's happening right now. I mean, even if you can search on Google, $1 is 17.35, but it doesn't matter anyway. So yeah, that's my overview for the week. Bullish on DXY and bearish on whatever counter basis of DXY is, which is AUD USD, Euro USD, and GBP USD. Yeah, and this is what I use. Sometimes I use order blocks as my entry. Sometimes I use fair value gaps, but in most times I place that Fibonacci retracement tool also so that my entries become accurate, just like this one here. There was a zero drawdown, yeah, of which this is what I like mostly about the Fibonacci retracement tool. Yeah, and yeah, I think I'm done here, Njaya.
Uh, how many minutes are left of the session?
1 minute.
Only 1 minute.
Yeah.
We're just gonna continue over to the next session. Then
Or
we're
in
gonna discuss the
fundamentals.
fundamental analysis.
Yeah.
Yeah,
Yeah. That's all. Yeah. Yeah. Well, that's what I also wanted to discuss. Then, yeah, I mean, if Samsi posted this video and people have questions, and then we'll keep answering them according to our knowledge. Yeah. Well,
yeah,
yeah.
on the comment section. Yeah, you can now stop recording, my dog. You can now stop recording.
Uh,
Um,